So, just about every FX Street session we spend it all on live markets and identifying market turning points and market moves and trades and all that, and setting up trades. But my biggest fear is that what we don't want is just turn into a trading room. I think what's actually more important. We can always do that. The markets are always there. We can always do that. But I think it's important to take a step back once in a while and really understand how all this really works. How money is really made and lost in the markets. Exactly how and why prices turn and prices move in markets. Most importantly, why the institutions, right? Why so many financial institutions around the world make so much money and the average person doesn't, right? That should be okay. Let me see. I see a couple people asking about the sound. Is that all right? Okay, good. Let me ask you this. Is this sound any better or the same? Better. Interesting. Okay. Well, we'll stick with this. The trading's always been a lot easier for me than the technology, I'll tell you that. So let's get started. And we'll certainly end the session by looking at some live charts. We'll look at some live markets like we always do. But we haven't gone over kind of the basics of how this all works in quite a while. And I'm not even talking about, the picture on the chart that represents, institution demand and institution supply. I'm talking about even before that. All right, so let's take a kind of a deep step back and just hear me out, and I think you'll see where I'm going with this. So if you think about the financial markets, right, trading, so I started trading right here, as you see, on the floor of the Chicago Mercantile Exchange. Yeah, so I started on the floor of the Chicago Mercantile Exchange. I actually started in the currencies. And a big thing you need to understand is when I started, I knew absolutely nothing. I had no experience. I had, no preconceived notions. No one poisoned me with bad information. You could have given me any strategy and told me this is what you do, and I would have listened to you 100% because I didn't know any better, right? You could have said buy on Tuesdays with a stop below the prior Wednesday's low and only doing it when it's a full moon the night before, and you're going to make a lot of money, and I would have done that, okay? So Nico's asking a great question, and we're going to get to that, Nico, but let me kind of hit it right here for a minute. Yeah, but it should. So Nico's saying, well, isn't it easier on a trading floor because you have the orders in front of you? I used to think that way a long time ago, but after being on the charts for so long, I would argue it's actually the opposite. And here's the way that works. So, remember, I was on a trading floor, and I did have major institution and bank and fund orders right in front of me, and those were real orders. Those were not just, fake orders, just bids and offers that people pull all the time. These are real orders. But those were the orders that our trade desk has. And I could have peeked over to our right at our J.P. Morgan friends and, seen their orders, and I could have looked at the Goldman Sachs desk, which was not far away, and seen their orders too. But still, those were just our orders. There were other orders out there around the world. Where's the one place where you see everybody's willing demand and everybody's willing supply? It's not the trading floor. Yeah, it's the charts. All right, so it's all there if you know what you're looking for, okay? Yeah, so Nico, if you're focused on level 2 market depth as supply and demand, I'm just going to give you my opinion. I wouldn't spend another second doing that. Because, and if you do, I'm going to introduce you to a new way to look at that. Okay? In other words, on your level 2 screens, the market depth, when, even the fact that there's no central exchange, that should make it even clearer why you should not be looking at, a level 2, market depth screen in the Forex markets, right? Okay. Yes, Boyke, absolutely. The ones I dealt with did. So yeah, let me continue, and then we'll get back to that in just a little bit. Because it really, what your question there ties right in, not yours, Boyke, but the other ones. Yeah, so they all had specific prices. Almost all of them were limit orders, right? Institutions and banks and funds would put in limit orders, and retail traders would put in market orders. That's something that was very clear. Another thing that was very clear, and this is the thing that really just got me so fascinated with the markets, was that, your average institution did so well so often, and your average retail trader actually did the opposite so poorly so often. So I always thought to myself, wow, how is this happening? This doesn't make any sense, but to me it's fascinating, right? And if I could just learn what an institution does, I'd be all set. Well, so I focused on that, and I saw, and what became very clear when I decided that was going to be my focus back then was I started to see where their profits came from, and I figured if their trades tend to be the right trades, well, where are they buying and selling, and who are they buying and selling from? If they're making all that money, somebody's losing it, right? So I started to see this, and that picture was even clearer to me because I had it all in front of me. It was retail traders, right? Not every institution is extremely profitable, but I'm talking about your average ones, your big ones, right? Bank of America. I think what I read was Bank of America is the only financial institution that had no losing days last year. Goldman Sachs had some losing days. They made plenty of money, but they actually had some losing days. Bank of America had none. There's an article out this morning. If you go to Yahoo News and you scroll down a little bit, it's a fascinating article. And let me explain why it's fascinating. It's about a trade Bank of America had in the options markets. It was very recent. Anybody see that? And it was about how profitable it was. They made like $1 million on it very quickly. Okay. But here's the fascinating part of the article. Make sure you get this part. The fascinating part of the article was they were the underwriters. They bought options on a stock that they thought was going to go up. They were also the underwriters for this company that was buying another company. Okay, so the company that they underwrote this deal where this one company was going to buy another company, and right before they did it, they bought options on the stock they thought would go up of the two companies, right? And so as soon as it happens, the stock they underwrite the deal. A couple weeks later, the deal's announced, and the stock jumps 24%. Right? Bank of America owned the calls. They take their profits. They made a ton of money. Right? The fascinating part of the article when you read it is no one is saying that there's anything wrong with that. The article is about how profitable the trade was, not the fact that they can do that, but if we do that, we go to jail and prison, right? Okay. You will go to jail and you'll have to forfeit a lot of money if you do that. There's the article. Someone found it. Thanks, Jason. Right? But I'm telling you, the most fascinating thing about an article is there's nothing wrong with what they're doing because they're an institution. If you or I do that, we're in big trouble. Does that make sense? Anyway, that's what I found most fascinating about the article is thinking to myself, does anybody see anything wrong with this? Anyway. So how can we do all that? Thanks for posting that article. No, and they're not going to hear from the SEC because there's nothing wrong with what they did. Okay, yeah, it's up there in the chat. You could say they're all shark sim. I can kind of agree with you, but at the end of the day, all they're doing is buying low and selling high. But the main point is this group on the left, all right, makes an absolute fortune from this group on the right. Now, this group on the right, the retail traders and investors. Let's talk about them for a moment. Okay. Yes, and we can absolutely see supply and demand on a chart. We'll get to that in a minute. But let's focus on these retail traders and investors. Okay. Now, everyone, think about this for a minute, because I really want to make sure that everybody understands this from the core, basic bottom floor. This may seem boring to you at the moment, but you'll see we're getting to something very important. Who are these retail? Because everybody says, well, and I get that. I totally understand this argument. Well, how can these two groups even be matched up against each other? I mean, institutions have so much money, they move the markets. Retail traders and investors, they're such a small percentage of the market, right? We'd all probably agree with that sort of, right? I mean, it's like, come on, really, how can this group really be making money from this group? Because this group's so small and this group's so big. Well, think about that. I've thought about that for a long time. Who are these retail traders and investors? Who are these people? And I'm not just talking about day traders. That's a tiny subset of people. Right? Who are these traders and investors in the forex market, stock market, futures? Who are these people? They're everybody, right? Let's talk about the United States for a minute, and then we'll move around the world. Your average job, your average career in the United States, right? What are you doing with the money that you make? Any of the money that you're saving, where's it going? It's going into your 401k. It's going into mutual funds. It's going into IRAs, right? Your company is even directing you to do that. The professionals are directing you to do that, right? Okay. Every single day, billions of dollars are going into financial products and stocks and forex markets and currencies and all this stuff from this group over here. This group is actually not small at all. In fact, I would argue that the money coming from this group is infinitely not larger than the money over here. Remember, don't think of it as one against the other. Where does the money start? The money starts when you go to work, you get that paycheck, and you pay your bills, you keep your spending money, and then that investment income that you put into your 401k, that you put into your mutual fund, that you put into your whatever financial product there is. Okay? That's where the money starts for the financial system. Does everybody understand that? It starts there, and then it gets siphoned and transferred over here. Okay? This group over here gets paid three ways. They get paid on fees, right? So when you're told to buy something or invest in something or open up a forex trade account, you paid on fees. Number one. Number two, they get paid through trading, because everybody out there, buys high and sells low. I'll show you that in a minute. Okay. What's another way they get paid? They get paid on the spread. So they get paid three ways from the average person out there. And you may be thinking, okay, you may be thinking that, what does this have to do with forex trading? Okay. You as a forex trader are making money from movements in the forex markets, which are tied to movements in the equity index markets, which are tied to movements in the U.S. dollar and treasuries. Believe me, this 100% affects you if you're a forex trader. Okay. Now we call them 401ks in the United States. In the UK, anyway, there's other stuff in the UK, right? Pensions are a huge part of UK SIPs. In India, they have their version, and in Asia, they have theirs. It's on and on and on. It's the same thing all over the world. Okay. So understand where the money starts. Okay. Harsh, yeah, but let me tell you, the world is never going to catch up. I'm not worried about that at all. Okay. Now let me switch to the next screen here. Okay. So the money actually starts there and then transfers over to the left. Now let's look at this. Okay. Skynet, absolutely. So now I think I get your question, but let me just, because Skynet's asking a good question. We think that everyone's looking for supply and demand or turning points in the market. That's not correct at all. Okay, not correct at all. Any big company that buys or sells products, that produces and sells products outside of their borders, the United States, Europe, Asia, any company in Germany, wherever that produces products and sells them outside their borders, okay, their risk is currencies. Okay, so banks and just anybody that produces anything, it's huge business. Okay. Medium-sized businesses have someone hedging currency risk, right? They and I'm sure I know a number of these people, not from the trading world, but I know them. I mean, I have a family member who works for an insurance company, and she buys and sells currency to keep their risk in line. She never looks at a chart. She has no interest in she doesn't know anything about a chart. She's just told this is how much currency we need, and she buys it. Okay? She just goes in the market and buys it. When Microsoft has to make good on some options that are coming due for someone, they're not looking at a chart. They buy the stock. You see what I'm saying? There's infinitely more people buying and selling in the markets for other reasons than there are people buying and selling in the markets looking at charts and trying to pick tops and bottoms. Anyway, take a look at the chart, and I think this will really help you. So if you're on a trade desk like I was, or if you're on a trade desk today at, say, a Goldman Sachs or a big bank, any big bank, Barclays, whatever, this is what you're looking at. Right? Current price. As price goes down, you've got stacks of buy orders. As price goes up, you've got stacks of sell orders that are increasing. And this market that we're looking at right here in front of you, okay, this could be any market. We're talking about currencies today in Forex. We could be talking about gym shoes or jelly beans or airplanes or whatever. How we arrive at a price where a transaction happens in any market is all just pure supply and demand, right? So, Jan, absolutely, 100%. I'll explain that in a minute. So as you drop price in any market, demand is going to increase. As price rises in any market, supply is going to increase. Does everybody clearly understand that? Okay. All right. So what you also need to understand is the trading activity. And this is very important because now we're starting to relate this to price charts. So when the trading books tell us, when the trading books, conventional trading books tell us to look for key support resistance levels on a chart, we're taught to look for areas on the chart where there was lots of trading activity, many candles on the screen, above average volume, right? Look for lots of activity. That's going to be a strong support and resistance level. But if you look at this, if you look at what I created for you here, the most activity is always going to come right here in the middle, right? That's where you're going to get your most transactions. As price moves down to, low price levels where demand greatly exceeds supply, you're going to get less activity out there. And up here towards supply, you're going to get very little activity. Does everybody understand that? Your best supply and demand levels are going to be found out here and out here. Right? David, exactly. 100%. Right? Does everybody understand that? So the picture that represents a quality supply and demand level is opposite of what everybody's taught to look for in the trading books. Everybody, yes, the curve, exactly, Ray, the curve. Okay. So let's move on though, and let's look at another one. So what you need to do as a screen-based trader is this picture that you're seeing here. This is what the trade desk will look like if you're on it today, 20 years ago, 30 years ago, 100 years from now. This is what it'll look like. What you need to do, all a price chart is this picture sideways. Okay? All a price chart is that picture sideways. So let's start to create that to get your mind in the right spot. Okay? This is a price chart. And the main thing I want you to get from today is why so many people lose money. How many people have you heard say, how many times have you heard the new trader say, boy, if I only took the opposite trade of all my, opposite side of all my trades, I'd have so much money. Right? If I just took the opposite side of all my trades, I'd have so much money. So many people say that. Okay? This is why right here. Okay? Now, here's a trade I took. I haven't had a chance to capture this week's trades, but I've got all of the trades before this, so I've got a ton from last week. Let's just look at one here. Okay. Just identified a demand level. Now the chart is scrunched because I'd have to scroll back pretty far to show you. It's a great level. We had a nice demand level. Okay. And then just bought a demand and made some money in this trade. Took 3 trades in that day. Anyway, but we bought down here where the buy orders were, right? And then we sell as prices get close to supply. Troy, I take about 1 trade a day, maybe 2 sometimes, and that's for the short-term income. But I always usually have some option trades going as well, longer-term stuff. So again, just we'll get to the details of the charts in a bit, and we always focus on the charts, which is great. But so here's the problem. Here's why so many people lose money. Nobody, look at this point right here. How many people would feel comfortable pushing the buy button right down here? Okay, not many. In fact, if you do that, if you buy right here in the trading world, what are people going to say? What are you going to get accused of? If you tell your trading buddies that you're buying right here, what are they going to say? They're going to say you're crazy. Exactly. They're going to say you're crazy. It's high risk. Let me just put this right here. Okay. Yeah, they're going to say you're crazy. Yeah, and they're going to call it contrarian. Someone just pointed out the word contrarian. Exactly. We have to call this contrarian simply because everybody does this backwards. But anyway, let me get my. There we go. So yeah, if you buy down here, people are going to say you're crazy. They're going to say it's high risk. Don't buy here because you don't know that there's any buyers yet. Santosh, great, wonderful. Okay, the other thing is, what was the trend in price when we pushed the buy button here for this trade? What was the trend in price? It was down. Have you ever read a trading book that said buying a downtrend? No, it doesn't exist, right? Yet that's what we're kind of always asking you to do. Now, we're not just saying blindly buying downtrends and selling uptrends. That's not what we're saying at all. Okay? We want to be a part of uptrends. We just want to get in at the turn. Like, I want to be a part of this move up. I just want to get in at the turn in price. I don't want to wait for prices to turn. Yeah. And the big picture trend here, Vlad, absolutely was up. This is the DAX last week. So, now the trading books will say don't buy here because you don't know if there's any buyers yet, right? Wait for some green candles, some confirmation, and then buy. Okay, but if we wait for that confirmation, what's now happened to our risk? Has it gone up or down? It's gone up. And what about a reward or profit zone? It's gone down. Okay? So my point is, probably one of my biggest points is, if we're all convinced that over here on the right, this is how it works in any market on the planet, you need to understand that everything you've been conditioned to do and think from a very young age in school to reading all the trading books, the average person is not just taught wrong, but they're taught absolutely backwards. It's not just wrong, it's backwards. Think about, now this is a market, we talk about Forex, we'll look at Forex, right? What about think about a stock. That's what most people buy around with their stocks, right? Well, how's the average person taught to buy a stock? They're taught, make sure it's a good company with strong management, a healthy balance sheet, make sure earnings are good. Yeah, and the sheet absolutely make sure it's in an uptrend, right? Okay, it has to be in an uptrend when we buy it. But here's the thing. When all those pieces of information are true, where do you think the price of the stock is? Is it at wholesale prices down here at demand or retail prices up here at supply? It's at retail prices, okay? In the Forex markets, which are so driven by news, the news is always going to be good when prices are up here and always going to be bad when prices are down here. Now let's say that you know what, you're smarter than the average person, and you're going to start reading trading books, and you're going to read like the Bible of technical analysis. Okay? I just guessed at what I thought were probably the 3 or 4 most popular conventional chart patterns on the planet. You may have others, but any chart pattern you can name, and you can type it in the chat if you want to, but any chart pattern you could think of, it's the same thing, right? So we've got the head and shoulders top here, and By the way, I grabbed these pictures from the internet. I didn't create these. I grabbed these from the internet. So we've got the head and shoulders, cup and handle, double top, double bottom. Those are probably Nico, huge difference. I'll try to get into that in a bit. Okay. So I grabbed these because I figured these are probably the most popular, right? Does anybody else have another favorite that they like that's not here? Anybody else have another favorite? All right. Triangles, yeah. So here's the thing. With any one of these patterns, right? So we've got two bearish patterns here, the head and shoulders top and the double top. These two bearish patterns on the left. What's the problem with them? Here's the head and the two shoulders, right? We're taught to, when you have the two shoulders and the head, draw your neckline, and then this circled area, what are we supposed to do in this circled area? When price breaks below the neckline, yeah, we're supposed to sell. Just like down here at the double bottom, we're supposed to sell. When price breaks out of the double bottom here in this circled area, what are we supposed to do? We're supposed to buy. The cup and handle, right? One of the most popular patterns out there these days. You're supposed to buy here. Okay. But does everybody clearly understand that if you do that, you're buying here and selling here? There's a reason why most people lose money. People come to the trading world and they're well aware that, 80-90% of active traders lose money. So think about it. You're like the 10% that thinks they can possibly do this. What's so special about you? You see what I'm saying? And I don't mean it like that. My point is, I never buy, dive into that. There's such a clear reason. Notice there's very few people in the middle. There's very few people. How many people you heard say, "Oh yeah, I make a nice living trading"? No, people either tend to make quite a bit of money and have a great return, or are horrible and lose a lot of money. You don't find a lot of people in between, because this is one of those things where you either get it and buy here and sell here, or you don't, and you end up buying here and selling here. And that's what I notice most on the trading floor. That's one of my main points, is that everybody is, so Pratik, see how Pratik is saying I'm a counter trend trader. I would not call myself a counter trend trader at all. This is not counter trend trading at all. In an uptrend, for example, which we want to get paid from, that's how we made money here, right? We buy at the turn and make money when prices go up. By the time it's an uptrend, you want to already be in that. But the problem with conventional trend analysis is, obviously the two ways that people will buy into an uptrend, the average person, they're going to buy a breakout, okay, or they're going to buy a pullback in price to a moving average or a pivot point or something like that. We wouldn't suggest doing either of those two things. We simply want to buy pullbacks to demand levels and uptrends, and short rallies into supply levels in downtrends. Make sense? Okay. Yeah, so hopefully you can see that, and again, I understand that these things that I'm showing you here and all the conventional stuff, this has been in trading books for the past, 100 years. And it's all the same stuff. But just because it's in books doesn't mean that it works. Do you think the banks that you trade through, or the Goldman Sachs, for example, you think they have a meeting every morning and say, all right, let's get all our traders in here. Now, for anyone that found a head and shoulders pattern today, please raise your hand so we can all know about it. And where's the group that found all the double bottoms today? Or anybody? Where's my cup and handle team? Goldman Sachs, right? You see what I'm saying? No, they laugh at those things. That has nothing to do with how they make money. And the last thing I'll say to this before we get to the live markets, okay. The last thing I'll say before we get to the live markets is, whether it's Goldman Sachs or Barclays Bank or any of the big ones around the world, any of them, Make no mistake about it. They are in the exact same business as Walmart in the U.S., Tesco in the U.K., Big Bazaar in India. I don't know what the big one is in Asia, but I'm sure there is one. Okay? There is nothing different between a Walmart and a Goldman Sachs. They are in the same exact business. Walmart buys the socks and the and the plastic and the toothpaste for 50 cents and sells it to us for $5. Right? Goldman Sachs gets the stocks and the bonds for a certain price, and they're only in business to sell it for a higher price. There's no difference. How they operate behind the scenes there's no difference. You see what I'm saying? Remember when Facebook went public? Right. Okay, what was remember Goldman Sachs was one of the big companies that helped take Facebook public, right? What did they get for what did Goldman Sachs get paid for the work that they did? Okay. They got paid money but mainly what did they get paid? Lots of shares of stock at a deep discount price. Okay. What was Goldman Sachs doing the day that on Goldman Sachs' first day of trading? Were they buying or selling? Right. What was Goldman Sachs doing? They were selling. Right? They were selling, of course. Now here's the other question. Here's the big question. What were Goldman Sachs and the rest of them doing a week or two before the first trading day for Facebook? Anybody remember what happened about that week or so before? Remember they had this big parade in New York? Remember that? The big thing? Remember the big parade? It was like a big parade in Manhattan. Remember all that? And Zuckerberg was there, and this big stage and balloons, and yeah, right? Okay. That's no different from Walmart having a commercial on television, telling you how great their merchandise is and how cheap it is. Make sense? There's no difference. So what you need to do is start thinking, acting, and trading like an institution. And I will tell you, I could talk to you about this all day long and show you every single trade for the past year and how great everything was and lay out the strategy on a silver platter for you. But here's the reason why many of you will not be able to do it. And I'm not trying to be negative. I'm just trying to be realistic. Because the urge, there's so much coming at the average person every single day, every single week to get them to play this backwards. Okay? It's everything coming at you from your trading platforms to the news that's coming out 24 hours a day, 7 days a week, to to whatever, the trading books, to everything you're learning in school, when you're a kid, how to buy and sell stocks, buy it when it's good and good news and all that. Everything out there is getting you to buy here and sell here. Okay. All right. Yeah. So that. Let's see. There's that. Let me just scroll through some of these. I don't even know what this. Here's one I really like. Everybody know who Paul Tudor Jones is? Who knows who Paul Tudor Jones is? Who's heard of Paul Tudor Jones? Let me know here in the chat if you've heard of Paul Tudor Jones. Considered one of the best traders of our lifetime, right? Yeah, so Paul Tudor Jones, as you see here, is one of the most successful traders of the past century. His net worth is around $3.3 billion. He mainly focuses on short-term trading. Now, I'll tell you, one of the biggest pushbacks that I get from people around the world, right? I've been writing the articles for many, many years, and one of the biggest pushbacks I get is, Sam, the market timing stuff, it's great, but trying to pick tops and bottoms is risky, right? Trying to pick tops and bottoms is risky, and it's hard to do, and nobody can do it. And a lot of people come to me, new people, they say, it's just so much easier to get the meat in the middle. Just capture a little bit of the trend. Have you ever heard that from people? Everybody says that. Don't try to pick tops and bottoms. It's hard to do. It's risky. Just try to get the low risk money in the middle. Everybody says it's easy and it's low risk to just get the middle of a move. Well, I'm going to be 100% honest with you right here. Okay, I'm going to be very honest with you. I have never had an easy time doing that. I have not figured out how to get that easy money in the middle of a move. While prices are going up, to push the buy button and make money, I'm just being honest with you. So, I'm saying while price is moving up in an uptrend, just pushing the buy button randomly and just, where do you get in? Where do you put your stop? Where's your target? You see what I'm saying? Okay. So, I've never had an easy time doing that. Anyway, about a month ago, Paul Tudor Jones comes out with this quote. Okay? Look at the quote he puts here. This is from him. He says, I believe, and I was thrilled when he put this out. He says, I believe the very best money is made at market turns. Everyone says you get killed trying to pick tops and bottoms, and you make all your money by playing the trend in the middle. Well, for 12 years, I've been missing the meat in the middle, but I made a lot of money at tops and bottoms. So I was pretty happy when he put that quote out there because I feel exactly the same way. But for a while, you kind of feel like you're on an island. Like, wow, how's everybody getting this easy money in the middle? How do they do that? Then you check people's trading statements, and it turns out many of them are not getting that easy money in the middle, right? Okay. Exactly, Boyke. He's just trading like an institution. Okay. Make sense? All right. So I want to get to the live markets. Here's just a few trades from the past couple weeks here. We did get any? I'm sure I got some Euro trades here. DAX. There's Euro. Okay. And Boyke, I see your word experience there. Well, the only thing I would add to that is experience doing the right thing. And that's my biggest advantage. I'm no smarter than anybody else. Just when I was learning this stuff, I, by chance, happened to learn it the right way. It wasn't because I decided to learn it the right way or I knew what to look for. It was by chance. You follow me? Okay. If I didn't learn it that way, I would have read a trading book like everybody else, and I would have tried to make that stuff work, and I would have been brainwashed too. Anyway. Okay. All right. So there's a trade from the Euro, and again, I'm just showing you just the kind of the income trades over the past couple of weeks. But let's go into the live markets here. Let me pull up the chart. I have no idea what the Euro is doing at the moment, so let's find out. Just a minute, I'll get that up. Can you see the charts right now? By the way, I just pulled the chart up. I don't know if you can see it. All right, so here's a chart. Let's do a quick, very quick follow-up to what we talked about before. Remember the dollar. Remember we had the dollar coming into this supply zone. But if you remember, we were saying be careful with that because there's a quality demand zone just below, which there is. Prices came up to the supply, down to demand, and now back up to supply. Now they're coming back down. So like we said last time, we're likely to just bounce around in here. And, right, it looks like we're penetrating deeper into the supply zone. So far that's telling us the dollar wants, can go higher. In other words, which zone is being, is price going into easier, right, deeper? So far it's the supply zone. So that's suggesting the dollar can go higher, and we're just touching the demand zone and turning. So that's saying there's still a lot of demand for dollars, which is bearish on Euro, bearish on equity index markets. Okay. Let's see. All right, so let's take a look at the Euro. Yeah, the Euro right here this morning. I don't know if anybody caught this, but I saw we had some trading room people catch this. There were two demand levels on top of each other earlier today. I didn't catch this. Wish I would have been around to catch this, but I didn't. We've got this little demand zone here, and then we had obviously the cleaner one right here. Anybody able to get that? Nico, you grab that? Excellent. All right. So nice. This is exactly what we talk about: levels on top of levels, strong move away from the level. All the odds enhancers are here. I wouldn't expect you to get all this move. If you do, great, but you'd probably take some profits around 130.60. I don't know where you guys took your profits. Nice. Excellent. Looks like a bunch of you took that. So good job. But the other thing you had going for you here is look where the Euro is in the larger time frame. Right? Dollar butting up against some supply. Again, we've got demand below, but at least there's some supply there to stop the dollar from rallying, which which is bullish for the euro. Right? Larger time frame demand in the euro, and some small time frame demand. Okay. Okay. All right. So again, now I'd say we're still pretty bearish on the euro, but we do have a demand level here to deal with. So I wouldn't be selling the euro right in here. Okay. But no, it could certainly go higher. So if we look at the daily, actually let's look at this one right here, the 240. Whoops. Sorry about that. Let me get this chart organized here. Okay, first of all, I know we're not close to this now, but just so you have it, watch this little level down here. Again, I know we're not close to this. I want to make sure you have it, though, because I'm not sure we're going to meet again. Okay. We've got that there. And then as far as supply above, Dan, I don't pay attention to news other than if news is coming out, I'm pretty sure that price is going to, move to our supply and demand levels where we want to enter positions or exit positions. In other words, news is going to speed up what was going to happen anyway, so we want to be aware. We want to be aware that, honestly, I don't really follow news or really know when news is coming out, so I'm going to do what I'm going to do anyway, regardless of the news, if that makes sense. All right. Well, Carl, I try to be honest. I don't know. All right. Let's see. We come down to the euro, the 60. I'm just trying to find where the supply is above. Yeah, we've got some stuff right here. Nothing exciting. Nothing exciting yet. Hang on a second. Let's go down a few time frames until we can find some clear supply above. Sorry about this. I'm usually so here's a level that we'd probably be not in love with this level, but this is very likely to stop prices from rallying. Okay. But again, I'd be very careful shorting, at least at current price levels, because we're still not that far from the supply. I'm sorry, the larger time frame demand below. Yeah, but this 131.40, again, not a great level, but there should be some supply up there. The next level up is going to obviously be this one right here, but we're going to hit that other one first. Okay. The stronger levels that we're going to get excited about selling euro come up at 133.50. Okay, these two areas up here are the much more exciting levels. All right. Okay. I'm just reading back in the chat there. That works. And so that's what we have in the euro. Nothing else that's that close to current price. Let's see. We wouldn't look for a reversal, Jake. We would just, once we find our levels, and we'll go back and have some more basic lessons. But you can. I would suggest you go back and watch the recordings if you like. Yeah, we don't wait for reversals. We just get in at the price. Again, just like you were playing if you were playing the actual orders. Okay. All right, so I don't want to take up too much of your time. I see we're out of time here. I just typed my email address in the chat, sseiden@tradingacademy.com. Yeah, and keep those levels on your dollar charts for sure. I see some comments on that. Absolutely. Thanks so much for your time, and hopefully that was helpful. It's just important that you understand how this game works, and the more you understand how it works, like any game out there, the better you're going to do. All right, have a great day, everybody. Send me an email if you need to, sseiden@tradingacademy.com, and we'll see you soon. Thanks a lot.